The US economy is exhibiting remarkable resilience, as suggested by the projected annualized GDP growth of 2.7% for the fourth quarter of the year. This robust economic performance supports the Federal Reserve's decision to hold interest rates steady, signaling confidence in the underlying strength of the economy. Meanwhile, the European Central Bank (ECB), Sweden and Canada are contemplating rate cuts, reflecting divergent monetary policies in response to varying economic conditions. Additionally, Chancellor Reeves's upcoming speech on growth is highly anticipated for insights into future economic strategies. U.S. Economic Overview. The U.S. economy's anticipated GDP growth of 2.7% in the fourth quarter highlights solid footing, driven by multiple factors including consumer spending, business investments, and government expenditures. Despite global uncertainties, the domestic economy has managed to sustain momentum, bolstered by a resilient labor market and robust consumer confidence. 1. Consumer spending. Key driver: consumer spending accounts for nearly 70% of the US GDP. The holiday season has witnessed strong retail sales, contributing significantly to the GDP growth. Influences: factors such as wage growth, low unemployment rates, and increased household savings have fueled consumer spending. The pandemic-era savings are gradually being spent, adding to economic activity. 2. Business investments. Capital expenditures. Businesses have ramped up investments in capital goods, technology, and infrastructure. This trend indicates long-term confidence in economic stability and future growth prospects. Manufacturing sector. The manufacturing sector, particularly in high-tech industries, has seen substantial investments. This sector's growth is a bellwether for broader economic health. Government expenditures. Fiscal policies. Government spending on infrastructure projects, healthcare, and defense has remained robust. These expenditures not only create jobs, but also stimulate demand in various sectors. Stimulus measures. Past stimulus measures continue to have a residual effect on the economy, providing a cushion against potential downturns. Federal Reserve's interest rate hold. The Federal Reserve's decision to maintain interest rates is rooted in its assessment of current economic conditions and future prospects. Several factors influence this policy stance. 1. Inflation management. Stable inflation. The inflation rate has shown signs of stabilizing within the Fed's target range. This stability is crucial for maintaining purchasing power and economic confidence. Supply chain improvements. Gradual improvements in global supply chains have helped temper inflationary pressures, providing the Fed with more flexibility in its rate decisions. 2. Labor market. Low unemployment. The labor market remains tight with low unemployment rates, contributing to wage growth and consumer spending. Job creation. Continuous job creation across various sectors has reinforced economic resilience, further justifying the Fed's rate hold. 3. Global economic conditions. Divergent policies. While the US economy is on solid footing, global economic conditions vary. The ECB, Sweden, and Canada considering rate cuts reflect their unique challenges and economic strategies. Trade relations. Stable trade relations and agreements have supported US economic growth, reducing uncertainties and fostering business confidence. ECB, Sweden, and Canada's monetary policies. The European Central Bank, ECB, Sweden, and Canada are exploring rate cuts to stimulate their economies. These decisions reflect differing economic landscapes and challenges faced by these regions. 1. ECB's policy response. Economic slowdown. The Eurozone has experienced slower economic growth, prompting the ECB to consider rate cuts to boost economic activity. Inflation concerns. Lower inflation rates in the Eurozone necessitate monetary easing to prevent deflation and stimulate demand. 2. Sweden's economic strategy. Domestic challenges. Sweden's economy faces challenges such as lower consumer spending and investment, leading to considerations of rate cuts to spur growth. Global uncertainties. Sweden's export-driven economy is vulnerable to global uncertainties. necessitating proactive monetary policies. 3. Canada's monetary approach. Commodity prices. Canada's economy, heavily reliant on commodities, has been impacted by fluctuating prices. Rate cuts aim to support economic stability amid these fluctuations. Housing market. The Canadian housing market's cooling has also influenced the central bank's considerations for rate adjustments. Chancellor Reeves's growth speech. Chancellor Reeves's upcoming speech on growth is eagerly anticipated for insights into the government's economic strategies and policies. Key aspects of the speech may include 1. Economic policies. Growth initiatives. Announcements on growth initiatives, including investments in technology, education, and infrastructure, are expected. These initiatives aim to enhance productivity and long-term economic stability. Tax policies. Potential adjustments to tax policies to incentivize investments and support businesses are likely topics of discussion. 2. Global trade relations. Trade agreements. The speech may address ongoing and future trade agreements, highlighting their impact on economic growth and stability. International collaboration. Emphasis on international collaboration and partnerships to navigate global economic challenges and opportunities is anticipated. 3. Sustainable growth. Environmental policies. The speech is expected to outline environmental policies and sustainable growth strategies, aligning economic goals with climate commitments. Green investments. Initiatives to promote green investments and renewable energy projects are likely to be emphasized, reflecting a commitment to sustainable development. Conclusion. The U.S. economy's solid footing and projected GDP growth of 2.7% in the fourth quarter reinforce the Federal Reserve's decision to hold interest rates. This decision is supported by stable inflation, a resilient labor market, and improved supply chains. Meanwhile, the ECB, Sweden, and Canada are considering rate cuts to address their unique economic challenges. Chancellor Reeves's upcoming growth speech is highly anticipated for insights into future economic strategies, focusing on growth initiatives, global trade relations, and sustainable development. Investors and policymakers will continue to monitor these developments closely as they navigate the dynamic economic landscape. The interplay of domestic resilience and global uncertainties will shape economic policies and strategies, influencing future growth trajectories.